I've noticed a few things in the housing market that has really got me concerned. I've seen a couple pretty major red flags, and so I thought I'd turn on the camera, have kind of a heart-to-heart with you guys, kind of tell you what these red flags are, and tell you what I honestly think the next 12 months have in store for the housing market and why it really concerns me. So as you guys probably know, home prices have just been skyrocketing really the last handful of months, really since about March. Home values have just been on a tear, going straight up, and there is no sign of them slowing down at all. In fact, my concern is that they're going to keep going up and may even go up even quicker over the next few months. So if you didn't know, according to the National Association of Realtors, home values have gone up 8% in the last 12 months. So if you have a $400,000 home, congratulations, you just made $32,000 in the last 12 months just by being a homeowner. And yeah, that may sound great, but this is partially what has got me concerned, right? That's not always healthy for a market when home values go up too quickly. And I honestly think that they're going to keep going up just like that over the next 12 months and possibly even longer than that. And this is causing some issues in the housing market, and it's not a healthy market because of that. So let's kind of take a step back here and really evaluate why home values have just been skyrocketing the last 12 months. So the biggest catalyst to this is going to be the Federal Reserve lowering their interest rates. Right now I'm seeing mortgages at 2.5%. That's some of the lowest ones that I've seen. I've seen some even lower than that every now and then. And that's just unbelievable. A year and a half ago, they're at maybe 3.5%, 4%. And so what's interesting is even though right now, let's say a $400,000 house is now $32,000 more expensive. So you buy a house right now, that home's gonna be $32,000 more expensive. But because your interest rate is a full point or even a point and a half lower than it would have been 12 months ago, your monthly mortgage payment's still going to be lower right now buying that more expensive house than if you would have bought it at a lower price 12 months ago with a higher interest rate, right? So we have that going on right now. And I think a lot of people realize this, whether consciously or not. And that's why so many people are trying to purchase homes right now and lock in these low interest rates while they can. And this is what's causing the major issue with the market. So what we're seeing right now is almost all homes are selling within just a few days of hitting the market. Here in Maryland, I've seen homes literally 1-2 days on the market and they have 5-6 offers on them. I'm seeing homes sell for $50,000 above list price. So if you're a home buyer right now, it is incredibly difficult to actually secure a home, right? Every home that you try to put an offer in, you have to expect that it's going to be a multiple offer situation, and you're going to be competing with just a lot of other people who are very aggressive. And this is one major issue right here. If you are not a homeowner and you're trying to get into this market, right now is a very tricky time to actually get into the market and be a homeowner so that you can take advantage of these other gains that I really think that we're going to see over the next 12 months. And that's very frustrating. I have numerous clients that we've literally submitted multiple offers on multiple homes, and the clients eventually just give up on searching for properties, and they just kind of concede and become renters. And I don't like seeing that, and it's not healthy for the market. So that's one big aspect to it, is that we have all of these buyers entering the market because interest rates are so low and their monthly mortgage payments are so much lower. Another aspect to this is that we have the moratorium on foreclosures. So we have a couple of big national moratorium on foreclosures for specific loans, but most states have enacted their own specific moratorium on foreclosures across the board on all loans. Here in Maryland, we've tied it to our state of emergency. So once the state of emergency is lifted, then banks can start foreclosing on their properties again. And so what this means is that the normal inventory that we usually have in the market from foreclosures and short sales, we don't have that inventory anymore. So we have a lot of buyers in the market and we have less inventory. And so you're going to ask yourself, well, when does that inventory come back? Yeah, so honestly, I don't think that we're going to be lifting this moratorium on foreclosures until probably spring or summer of next year, right? This pandemic is going to get worse over this winter time, especially with the holiday seasons and everything. So at best, spring or summer of next year. And that whole foreclosure process can take 6 to 12 months. So it may be fall of next year before we start seeing more foreclosures and short sales entering the market. And I don't think it's not going to crash the market like everybody keeps saying. Those foreclosures are just going to balance out just a little bit. And they're really just going to make a dent towards balancing out the market. It's not going to be an overwhelming amount that like the demand for buyers right now is so high. We would need a lot of inventory just to get into a balanced market. And okay, so that's kind of the issue here, is that if you're a homeowner, you're doing great. You're going to make a lot more money in the next 12 months just by owning a home. If you're not in the market right now, that's where those people are hurting. They want to get into the market, but they can't. And so what we're seeing here is a K-shaped recovery. So let me back up here a second. So with the economy, we're also seeing a K-shaped recovery. And so what that means is the stock market has been on a tear also since about March, April timeframe. But the economy itself is really down. According to the Fed, the effective unemployment rate's about 10%. There's a lot of people out there that are self-employed who are also they're still employed, but they're really hurting, right? And there's a lot of people that are really hurting right now with the economy being shut down like it is. But at the same time, people who own stocks on Facebook, Amazon, Google, any of these tech companies, Microsoft, Zoom, they're all doing great. I think I read somewhere that, Mark Zuckerberg has made an extra $1 billion since this pandemic started. So those people who are already at the top and are heavily invested in the stock market and tech companies, they're doing great, while everybody kind of the working class folks are really being impacted by all these closures. They're the ones who are really hurting. And this is where you get that K-shaped recovery, and you're seeing that wealth gap become larger within our economy, where we really have some people are doing really poor and some people are doing really great. And my concern is that we're now going to see this exact same K-shaped recovery with the housing market, except it's not going to be, it's going to be homeowners versus renters, right? Homeowners you're going to be doing good. Your home value is going to skyrocket over the next 12 months. I really do think so. But everybody else who's trying to become a homeowner, they're the ones who are going to be hurting, and they're going to have to just say, well, you have to suck it up and just rent for a while, and they're going to miss this opportunity. And what's going to happen is that the housing in this country is going to become more and more unaffordable. And this is a big crisis when first-time home buyers can't purchase a home because it's so unaffordable. Canada has this issue as well, that the home values have gone up too high and the average Joe just can't afford a home anymore. So we're not just seeing a K-shaped recovery in the economy, we're going to start seeing a K-shaped recovery within the housing market itself. And so that's just really got me concerned. And so we're seeing a lack of inventory right now. That's the biggest thing, is that there's just not enough homes on the market. And so let's fast forward 12 months. 12 months from now, I think that the interest rates are going to continue to drop. They have been dropping incredibly fast. They're going to continue to drop. Right now, they're about 2.5%. 12 months from now, they may be under 2%. Honestly, they may be at 1.5%. I honestly would not doubt that. The interest rates are kind of across the board in all sectors. And even though the housing sector is doing good, the economy and some other sectors are not, but they have to lower the interest rates across the board. So the housing market's kind of benefiting in a way from the economy doing poorly because the interest rates are all the same there. And if the economy keeps doing poorly because the pandemic gets worse over the winter time, interest rates are going to keep dropping. So you may be saying, okay, well, once interest rates go back up, great, problem solved. No. So let's say interest rates come down to 1.5%. And let's say everybody refinances their home loans. And then let's say they start going back up. And let's say they go from 1.5% back up to 3 to 4%. If you're a homeowner and you have a 1.5% interest rate, are you really going to want to sell your house and purchase another home where you now have to get a 3% interest rate or a 4% interest rate? I don't think so. So as the interest rates going up, you see inventory typically go down as well, where more and more people are just reluctant to sell their homes. And vice versa. As interest rates go down, somebody can say, well, instead of refinancing, how about I just sell my house and go buy another one, and I'll lock in a lower interest rate on that newer home. So what this means is that even 12 months from now, if interest rates start going back up to lower the number of buyers entering the market, that's also going to lower the number of sellers in the market. So inventory is going to shrink up even more. It's crazy. Yeah, we went from a nice, somewhat balanced market to just a completely unbalanced market with far more buyers in the market than sellers. Now you may be asking yourself, well, what about new construction? Let's ramp up on that. And that actually may be an option over the next couple of years. Right now, new construction is also suffering, right? Right now, they have the time period to build a new home has significantly increased. It went from like 3 to 6 months, now all up to about 9 months to get a new home built. And the price of lumber has skyrocketed. You wouldn't think that, but the price of lumber is really suffering right now, or not suffering, it's just skyrocketed. Lumber is incredibly expensive, and to get a new home built is much more expensive now than it was 12 months ago as well. So that's kind of what I'm seeing in this market. Everybody keeps talking about a market crash and housing, we're in a bubble and housing prices are gonna tank. I don't see it. That's honestly not what I see. What I see is that we're in a K-shaped recovery and home values are going to keep going up. And if you're not in the housing market, you're not going to be riding on this wave like everybody else is. And those folks that are not in the market, they're going to have a hard time getting into the housing market at all over the next few years. So if you are a home buyer and you want to get into this market, I mean, yeah, you have to get aggressive with your offers. And the tricky part is, if you have a typical loan, you can't get too aggressive because you have the appraisal that you have to pass. That's kind of the catch-22, is that you're going up against 6 other offers. And once again, those people who are doing pretty good for themselves and can pay significantly above list price or can make an all-cash offer, they're oftentimes winning that house, where somebody else who has a VA loan or an FHA loan and they have to pass that appraisal, they can't offer $20,000 above the home value because it's not going to pass that appraisal, and the deal won't go through unless they can bring that $20,000 to the table out of pocket. So that's what we're seeing, is this K-shaped recovery, and I don't know when it's going to end, honestly. I can't really foresee it ending anytime soon, as interest rates are going to keep plummeting and there are going to be more buyers in the market, and if interest rates ever start going back up, there's going to be less sellers in the market. So right now, if you're a homeowner, congratulations, you're going to make another, I honestly think that home values are going to keep going up another 8% in the next 12 months. If you're a home buyer, try to get in the market right now, do whatever you can. And even though you are paying $30,000 more than you would have 12 months ago, just look at what your monthly mortgage payment is. It's still going to be significantly lower than it was 12 months ago. And until you reach that point where your mortgage payment, my personal opinion, until you reach that point where your mortgage payment is going to be higher than it would have been 12 months ago, I say don't even focus on the housing price. Just focus on what your mortgage payment is going to be, because you're locking in that lower interest rate. So look, guys, I just want to give you my thoughts on that. And yeah, I don't really see a housing market crash, but I do see a pretty major crisis emerging. And we do also have a foreclosure crisis. So those folks that are suffering right now who are homeowners, but they're suffering economically, they're going to lose their homes, right? We are going to see a big foreclosure crisis, and we're going to see an increase in inventory. It's not going to be enough to crash the market. We're also going to see a eviction crisis. So once again, all those people who are really kind of hurting right now, those self-employed, the small business owners, the working class folks who are lost their jobs or underemployed, for the last 12 months, they couldn't get evicted. But once that foreclosure moratorium and the eviction moratorium is lifted, which will probably be spring or summer of next year, I don't know what you guys are going to do, right? We're going to have, what we're going to see is a lot of investors coming in, buying up that inventory, turning around, and then renting those homes right back to those same homeowners. again, I just keep seeing this K-shaped recovery where the folks with the money are going to own all the homes and the folks without the money are going to be stuck renting, and it's going to be so unaffordable that they're not going to be able to ever own homes. So that's really got me concerned. I don't like seeing that. I don't. I love working with first-time home buyers. I love helping people get into homes. But that's honestly what I'm seeing, and it's kind of got me concerned. It's got me a little sad. But that's just kind of what I'm seeing in the market right now and kind of what my predictions are for the next 12 months. So if you're a homeowner, congratulations. If you're a buyer, do whatever you can to try to get in the market right now.